Hi again, Mullenites. I hope you're all doing really well. So with this video, I want to do a bit of a dive deeper into, I suppose, the ongoing challenges faced by Mullen Automotive and the increasingly precarious situation for its shareholders. So despite a recent positive update from CEO David Michery in the form of a market update, generally the market's reaction has been anything but reassuring for Mullen Automotive. As of today, we mark the third consecutive day that Mullen stock has closed below the crucial $1 threshold, and this situation brings the company, I suppose, perilously close to receiving a delisting notice from the Nasdaq, which would have dire consequences for both the company and its investors. In David Michery's recent letter to shareholders aimed to highlight the company's financial stability and achievement, according to Michery, Mullen's total assets are expected to be approximately $191.4 million as of June 30th, and the company also boasts a cash position that surpasses its current market capitalization. Given that market cap currently sits at $15 million, that's not necessarily saying anything very good, but I think they have a bit more than that. These figures are indeed notable, but they do not seem to be offering much comfort to the markets. One of the key points Michery emphasised was the achievement of all federal and state regulatory requirements for their Class 1 and Class 3 commercial electric vehicles. Additionally, he stated that Mullen is actively manufacturing and selling these vehicles across the United States. However, despite these claims of operational success, the stock price tells a different story. If the sales were truly strong and the market had faith in Mullen's growth prospects, we would expect to see a much more positive reaction. Michery also announced that Mullen had secured $250 million in new financing commitments, and this includes $50 million already received, another $50 million as a one-year additional investment right, and $150 million through an equity line of credit. So while this influx of capital might seem like a positive development, it also signals potential further dilution of shareholder value, and I think that's a big thing that the market's been reacting to. The market's lukewarm response suggests that investors are, I suppose, wary of this dilution and are not convinced that these funds will, I suppose, translate into substantial growth or profitability. Anyway, let's delve into the sales aspect a bit more. So Michery's letter did highlight some sales achievements, such as agreements to sell over 200 B4 commercial Class 4 EV trucks and orders from the international dealer Gamma for various commercial EVs. However, these numbers are not particularly impressive when considering the scale and ambitions of Mullen Automotive and the intensive capital that's been invested in the company so far. The company needs to demonstrate robust and consistent sales growth, to instill confidence in its investors, and so far the sales figures mentioned do not seem to meet those expectations. And moreover, the letter also mentioned expanding the distribution network, adding 6 dealerships and partnering with 5 new commercial dealers. Bollinger Motors, Mullen's electric truck subsidiary, has also announced 4 commercial dealers throughout the US. While expanding the distribution network is a positive step, it does not necessarily equate to strong sales, and the market is looking for concrete evidence of increased demand and substantial sales growth, which Michery's update fails to convincingly provide, I think. Michery did attempt to project a strong future outlook by discussing the company's advancements in solid-state polymer battery technology. He noted that the company expects these battery packs to be fully certified for production and sale in the second half of 2025. While this is a promising development, it remains a long-term prospect, and the market is currently more concerned with the immediate challenges and the stock's continued slide. As we consider the market's reactions, it's clear that investors are not swayed by Michery's optimistic tone. The stock remains under $1, and the potential for a reverse stock split looms large. Another reverse split could further erode shareholder value and confidence, making it even harder for the company to regain its footing. The spectre of delisting is a serious threat. If Mullen stock fails to break the $1 mark for 30 consecutive days, the Nasdaq will issue a delisting notice, and this will force Mullen Automotive to trade over the counter, significantly reducing its visibility and attractiveness to institutional investors at the same time. So for a company that has already seen its stock plunge by over 95% this year, this could be the beginning of the end. So while David Michery's update attempts to paint a picture of a company on the rise, the market reaction tells a different story. The essence of dilution, coupled with weak sales figures, is not providing the comfort investors seek. The next few weeks will be critical for Mullen Automotive if the stock continues to languish below the $1 mark, and the company will indeed be facing a delisting notice, I believe. and shareholders will be left grappling with the fallout, which we've been grappling with for some years now. It's a tough road ahead for Mullen, and only time will tell if Michery and his team can navigate these turbulent waters. But, I suppose not many of us has that much faith in David Michery to do that. Anyway, thanks for watching, and, let me know your thoughts about the latest update from Mullen Automotive in the comments below. Always love to hear from you guys. Until next time, may the markets trade in your favour. Cheers.